All right, good morning, everyone. It is 8:49 in the morning on the 10th of March, 2022, and this is my pre-market strategy session. So today, here, I have the SPY up, and this is the daily chart. Although the lines for the pre-market opening price are on the chart, it's not easy to see. On the daily, I don't get pre-market candles on the daily chart, so I'd have to go to like the 10-minute or the hourly or something like that. I'll go to that here in a minute. Basically, you can see here, this is a trend line. Let me go to the monthly real quick and get an idea of where that trend line is coming from. It's from the top here in January to February's top, and it's kind of slicing through the candle right here in March. Let's go back to the daily here. So, and now here's the daily, and so here's where we are. There's this trend line. It's acting as resistance. There are bound to be a lot of people paying attention to it. Let's see if there's a Fibonacci. If I have a Fibonacci, here's a Fibonacci too. Let's see. Okay, so here's the zero line on the Fibonacci, and so essentially that makes kind of a downward wedge right there, and it looks like it's going to come to a resolution right around some point, by the 23rd of March. We'll see whether this resolves to the upside or to the downside. If I were to guess, I would say to the downside. And so the idea is for me to put myself into the probability of the direction of the market. So I'll be looking for bearish setups with a break below this low down here. We've already gotten a break below. This January 24th level. So the next break below would be down below the 24th of February. It's interesting. Exactly 1 month later. That's interesting. I mean, I like coincidences. And the more coincidences I have on my setup, the more I like it. The more conviction I'll have toward it. So here we have a break or a low on the 24th of January. Then exactly a day or a month later, we've got the break on the 24th of February. And then roughly, let's call this, where's this going to meet up here? Let's see where the Fibonacci. So here's the zero line on the Fibonacci that I had drawn, and it meets up right here, right there. So pretty much a month later, pretty much it's in between kind of these 2 days. Pretty much a month later, there's sort of a rather significant conjunction of price levels and resistance areas. They get the zero Fibonacci in combination with the downward trend line, in combination with a recent low there on this candle. Yeah, we'll call it. Actually, I'm going to get rid of that one. That one's it's not really relevant anymore. Get rid of that line right there. So kind of, just kind of a month later, after, a period of a month in between lows there, and then Fibonacci and the da-da-da-da-da-da. It's all, it's all coincidence, but some coincidences happen, as a matter of correspondence. Never know on the market exactly what those are going to be, what they're going to be, or anything. It's all a matter of probabilities. But I'd put a high probability trade over here toward the 22nd or 23rd of March, as to whether it's going to go up or down. Because if we break this trend right here, if this decides to break to the upside, it's going to be fast, and it's going to go longer than people expect, and it'll probably flush out a lot of the bears. So nothing goes in any direction, up or down, in a straight line in the market. But for the time being, the direction to be is still bearish. that's going to be the highest probability for trading success. And so I will be looking for bear setups. On the same thing with the Qs. IWM, I really don't play the IWM at all. Tesla, same thing with Tesla. Just looking, I'll be looking for opportunities to go short. Amazon, again, Amazon also. Amazon's had one hell of a pre-market bounce, though. This thing has gone up many points here. Let's see. Here's the 10-minute. So its previous close was at, let's see, 27.85, and here it is at 2,900. So it's up over $100 a share right now, 4% pre-market on a day when the SPY, is down 1.2%. Same thing with the Qs. It's kind of hard to call Amazon. Amazon. I mean, it's really like it's hard to call it a component. I mean, it is a component of the Qs, no doubt. I think it's a component of the SPY too, or the S&P. I can't imagine that it wouldn't be. I mean, it has to be. But it's not exactly. I mean, you can call it tech. You can call it consumer discretionary. You can call it consumer staples. Amazon's kind of covers all those areas, even somewhat as a utility with the web services that it provides. So, okay, hard to say exactly what Amazon is. I've gotten a few opportunities to short it, and it's done well with a pre-market bounce here. I don't even know. It's not earnings. It's not anything. I wonder what the headline is. Let's see. Poised to surge. Wall Street bets stocks largely up pre-market. Amazon, CrowdStrike poised to surge. Amazon.com to launch up to $10 billion buyback plan. Okay. Board approves 20-for-1 stock split. Oh, okay. Yeah, makes sense. All right. Hey, good for Amazon. 20-to-1. That'll put the stock price down to close to $100, 110, 100 as of right now. 100 and was that would be $140, $145 right now. Here, let's see. Let's do some math on a calculator. So we'll call it. Well, actually, the current price right now, $28.97. So we'll call it 2,900. So 2,900 divided by 20, yeah, it's 145, right? Yeah, 145. Okay, so yeah, good for Amazon. Glad they're doing it. It'll make their shares a lot more accessible to a lot more people and probably cause the stock to go much higher. All right, now oil is catching a little bit of a bid this morning. To me, this looks like a blow-off top to me. So I think it's probably safe to start looking for short opportunities in oil again. This Russia-Ukraine thing, it's dying down. Looks like to me that it's dying down. Sugar. Sugar's trying to break out. So I think short equities, long commodities is still a good idea. I think oil is way overblown, though. And let's see what else. I'm going to go to the risk ranges here. Oops. Risk ranges. Yeah, good. This is a really good spot to buy some bonds. It's at the top end of its range. The range is neutral. It's not bearish or bullish. So at the top end of the range, it's a good spot to buy some. Then at the bottom of the range, it's a good idea to sell some bonds. The SPX, let's see. So it's hard to see the SPX. It's better. Did I fix the futures here? Let's see, 4356. I don't remember if I put in the risk range for today. I think actually I did. So the SPX is kind of middle of the ground. There's a little bit more upside than downside in the risk range on the S&P. So it's still a better idea to look for bear setups than bullish setups. It's just when it's closer to the bottom of the range, it's the probability of getting into a profitable trade to the downside decreases. Nasdaq, same thing. No, actually, the Nasdaq, if there's something to be short, it's the Nasdaq. Nasdaq has a lot further down to go in its risk range in order to really satisfy it. satisfy the similar set. So, okay, yeah, I'll probably look for opportunities on the Nasdaq rather than the SPY today. Dollar's still kind of bobbing around in the middle of its range. There's more upside than downside on the risk range, and it's bullish, and so probability of getting into a profitable trade would be best to be long the dollar. And the closer it gets to the bottom of its range, the more likely it is to be an opportunity for a trade. All right, and yeah, and then everything else, gold, natural gas, yeah, I don't know, not really all that interested in trading it. Then there's Amazon and Tesla. Okay, everybody, good luck out there. Keep your risks tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.